Looks like we are live, right?
Great, great.
So, welcome to the Bitcoin Informant Show. And today we have Edward here from the US, and you're the communications director at Bitcoin Gold. Is that right?
That's right. I've been communications director since the beginning, since the end of 2017, and I've been a member of the board since the beginning of 2018. Hi,
Okay.
Dennis. Great to be here.
Awesome, awesome. To be honest, Bitcoin Gold was never a fork I really looked at, although it seemed interesting to me in the beginning because the idea behind Bitcoin Gold, as far as I understand, is to make Bitcoin mineable by the everyday person, basically return to the way it used to be before the invention of the ASICs. Is that the intention?
That's exactly right. Back in the early days of Bitcoin, anyone who ran the Bitcoin wallet was automatically mining. You would mine by default using your CPU. So back then it used to be true, one CPU, one vote, because you vote by mining. So if you held Bitcoin, you were a miner. If you were a miner, you also had a wallet. It was all connected. I mean, that changed over time. It went to GPU mining and then ASIC mining. But I'll correct you with one minor thing. We don't say we are Bitcoin decentralized. We're made in the Bitcoin model. We are very favorable towards Bitcoin. We're offering, but we never made the claim that we are the real Bitcoin. We never got involved in that nonsense. Bitcoin is Bitcoin. Bitcoin Gold is BTG. They are two separate things.
Yeah, I mean, fair enough. So let's start with the beginnings of Bitcoin Gold.
Sure.
How did it come about? What was the intention of it? When was it started? I think it was started by, was it Chinese guy?
There was a Chinese guy, Jack Liao. He's one of the 6 co-founders of BTG. And he was sort of the seed person behind the idea with some of the initial money and went about getting people together to try to put this project together. So he started reaching out to others, and those reached out and they formed a team of 6. The project started with a full fork of the entire Bitcoin blockchain. That was at the end of October, I think October 27th, if I recall, in 2017.
So at the height of the Bitcoin bubble, basically.
Yeah, basically at the height of the bubble. It was a crazy time. I know when they first made that copy of the chain, everybody said that was the beginning, but that was actually just the fork copy. At that point, several exchanges held BTG futures for trading based on future tokens, because everybody who held a Bitcoin on October 27 would hold that same number of BTG after 27. So they had futures, and the futures were trading at about 150. And then when the project actually launched, which was November 12th, so the first day a BTG block was mined was November 12th. That's the really beginning of the project. At that point, the prices spiked to sometimes to 250, 300 on some exchanges, very briefly. Every time a new exchange listed, there would be a ridiculous spike.
Yeah, so I see on the chart on December 20th, 2017, there was a price of $464.
Yeah, but that's a momentary spike, though. Sure. A momentary spike during the great mania of 2017. And we all know all coins collapsed since then. So we're kind of stuck because a lot of people show their total return on investment as if we were something you can invest in. But we're not an investment. We never had an ICO. We never sold coins to anyone. So you can't have an initial offering and investment. If you want to calculate return on investment, you have to ask, when did you buy and at what price? And honestly, that was a brief spike. Very few people bought at that price. Most people have bought over the course of the past 2.5 years. So they bought at all kinds of prices. Some people are up, some people are down. That's the reality.
At the moment, I mean, it's like it's a heavy bloodbath today. So all prices are down, and Bitcoin Gold actually sits at just under $10, $9.85 actually.
Yeah.
And I mean, the chart doesn't look too promising, but to be fair, I mean, the bubble popped, and since then it's been downhill for many coins. So it's not really a good representation of the health of a project if you just look at the charts, right?
Right, and we know that over the course of 2019, a lot of projects had to close up shop. Even projects on pretty prominent people with pretty prominent coins had to close up shop because they wore down all their funding. At the BTG organization, we had a difficult decision, and in August of 2018, during the beginning of crypto winter, we decided to go into austerity mode. We cut back everyone's salaries, we cut back our spending, we reduced our services to preserve the endowment to make it last long as possible. And I'm happy to say that means we're still here today, we're still surviving, we're still working on things and making progress. But we'd love to see price go up a little more so we could spend more on developers and get more progress done more quickly.
Yeah, sure. I mean, let's see how the next couple months go. I mean, everyone expecting a halving pump. I'm not so sure because everyone is expecting it, but the markets generally don't do what everyone is expecting. What do you see?
I'll tell you, I had the same idea as you. I was saying the markets must have priced this in because everybody knows it's happening. But then I was having a conversation on a news program with someone who is active in the markets, and he pointed out that, yes, I feel like everyone that I know knows about the halvings, but a lot of investors don't. There's a lot of investors out there, not just non-crypto investors, but actual crypto investors who don't realize the halvings are coming. They don't know that Bitcoin, Bitcoin Cash, Bitcoin Gold are all having halvings at different dates and that they're all going through this experience. We don't know for sure how it's going to affect a forked coin versus the original Bitcoin. There are a lot of arguments to be had both ways. On Bitcoin, you can say, this is going to be the most significant one ever because compared to 4 years ago, a lot more people know about and are involved in Bitcoin. But you can also say it's going to be a lot less significant because, let's face it, it's half as much of an impact as last time. The existing supply is much higher and the halving is taking it from this to this. It used to be a dramatic difference. When the first halving happened, it was 50 coin per block. It dropped to 25 coin per block, 25 coin difference. This one's taking us from 12.5 to 6.25. So it's not as much difference, especially when you consider there's already 17 million, almost 18 million coins out there. So the difference in the flow of new coin compared to the huge stock of existing coin, it's a much smaller difference than before.
That's right. That's right. I mean, the dynamics are different. The market is different. Let's see. I mean, we got the whole not currency markets. I mean, the whole debt bubble we have now. We look at the Corona crisis. The traditional markets are crashing, and it looks like it's going to be a tough year. And let's see how crypto is going to come out at the end. It's really the first big crisis, in my opinion, we have to face here with crypto.
Yeah, and what's interesting is plugging in the crisis argument. We know that most big miners are actually in it for the money. A lot of big miners are not mining to accumulate. So that means, and this is the argument that the halving will have a big impact. That means that the miners, when they receive coin, they have to sell that coin to do things like pay off debt for acquiring mining facilities and to pay for the expenses of running it. Someone's got to support it. A ton of money goes into electricity and cooling. So they spend all those coin they get. Now, if the amount of coin they get is cut in half because the block halving does that, they have less coin to sell. That means they're selling less coin. And if they're selling less, there's less downward pressure on price that should allow the price to naturally rise. That's an argument in favor of a price rise. You can argue this thing one way or the other all day long.
Yeah, that's true. I mean, we will have to wait. I mean, basically everyone is guessing and nobody knows really what's happening. So let's talk a little bit about Bitcoin Gold. I mean, Bitcoin Gold is something in Germany, I don't hear very much about it. I mean, I read about Bitcoin Gold. It has a few negative articles about it, like big whales are controlling the majority of coins, or I don't know. What do you think is the biggest negative in the open? What people perceive negative about Bitcoin Gold?
Negative perceptions. I see. It's hard to say because I can't get a read on the real negative perceptions because we hear from a lot of people who are huge fans. In certain parts of the world, there are more fans than others. In Asia, for example, a lot of people love the gold name. There's a lot of activity in Russia. There are more BTG nodes in Germany than any other country based on its size and population. So there is some support there. And when you hear the negatives, it's usually coming from trolls. And let's face it, trolls say all sorts of ridiculous stuff that isn't true. I've read that we had that our mined endowment when we started was 2 million coins and the developers ran away with all of it. No, that's complete nonsense. And the truth is on the blockchain. It was 100,000 coins. And as of today, we still have 48,000 of them in there because we've been on austerity. So,
and that's what makes you a little bit different. I mean, if you look at Bitcoin Cash, they're having a big argument about how is the development being funded. I mean, we got Bitcoin.com with massive funds. We got a few other companies who fund developers. BTC has Blockstream and some other companies as well. You guys have 100,000 coins, as you said.
And started with.
you started with 100,000 coins, and that's part of the core, the main development, which the money you get from those coins?
So far, that has been the only source of funds for everything that the organization does. We do not take any percentage of mining revenue. And back when we started, that was a notable point because a lot of coins at the time, including like Zcash, were taking significant percentages of mined coins to use for development. We took the position that we're going to stay with the Bitcoin model. That means no percentage coming out. It all goes to the miners. And we're completely decentralized. So any outside organization that wants to fund us, they can donate, but we're not based on any earnings revenue. So if you're an exchange, we're not going to compete with you by having our own exchange. If you do a wallet, we're not going to compete with you by offering a dozen wallets. We offer the core wallet, we have to, but we're not competing. We're not competing with the retail exchange services. We try to help the whole ecosystem. We support all the organizations that work with the coin, that support the coin. We don't try to compete with them. What we are doing now, though, because at this point we have run down about a little over half of that initial endowment. What we're doing now is beginning to open up to donations. We're going to be putting up a donations page soon where people can choose from multiple wallets to donate to the specific development goal they want. Do they want us to work more on new mobile wallets? Do they want us to work more on CCBN? Do they want us to do more advertising in particular parts of the world? And potentially, if there's a big exchange that people want us to be on that charges a fee, people could donate to raise funds to pay for a listing fee for that exchange. In practice, in reality, we're on plenty of exchanges, but we have never paid a listing fee to any exchange, and we don't intend to do that from the endowment. But if individuals want to pay a fee to get on a particular exchange, that's up to the community. We're trying to be as decentralized, as transparent as we can. So if the community wants that, if they put the money, if they put the funds into a wallet, we'll do what they're asking us to.
And then what I find quite surprising is, although you don't hear that much about Bitcoin Gold, I mean, in my perception, I don't hear that much about it. It's still place number 40 in coin market cap. So it's still quite big coin, because obviously everyone who had Bitcoin at that date has Bitcoin Gold. And it just didn't receive as much attention, I guess, as Bitcoin Cash did because of the bigger players. But the idea behind it is very interesting, because Bitcoin Gold wants to be mineable by everyone at home, and that was the way it was with Bitcoin. I mean, I spoke to some Bitcoin OGs, and they said, you know what? Back in the days, I fired up my laptop, I downloaded an exe file, I hit enter, and this thing started spitting out 50 coins once every couple hours, and it's like, it was crazy. It was crazy times. Nobody could have anticipated the journey up until now, but it was so easy. And if you look at Bitcoin mining today, you need millions of dollars. It's like a race, if you don't keep updating and spending that money. And it's really weird to look at it, because so many people are saying, okay, this is what makes Bitcoin secure, the lots of spending, blah blah blah, lots of burning of energy. And on the other hand, we have this centralization, really. I mean, Bitcoin is really mined by a handful of people who each other, they know each other very well, right? I mean,
a lot of them,
they could really control if they wanted to. I mean, wouldn't be good for the network, I guess, but it's not really decentralized. I mean, there are a few mining pools, and so.
And the other thing to mention, you were talking about the people who mine, they also know each other in terms of the people who produce the vast majority of the equipment. So if you want to get involved, even if you have a few $1 million, can you get enough miners? Are you going to be on the list that gets them, or are you only going to get a few? That makes a big difference too. And one thing I'll add is, since you're ordering special equipment, ASIC miners, you're paying a couple $1,000s ahead of time, and you get something after weeks and weeks pass. And here's the thing, what's the value of that miner? They're not pricing it based on cost plus 15% margin or something like that. Everybody knows that they look at how many coins you're going to mine over the next 9 to 12 months. How much value do you think that's going to be? All right, we're going to charge you 90% of that, because that's what people are willing to pay, which means the value of your hardware is completely dependent on coin price. So if I'm a miner and the halving is coming, I know that mining is going to be half as profitable. I know there's a lot of miners that are going to be out of business because the price of power is too high where they are. They're going to be selling their Bitcoin miners. The value of my Bitcoin miner will drop after the halving. Maybe I should sell it today instead of waiting till after the halving. Maybe I can try to buy some used miners after the halving. And if you talked about security, after the halving, there's a whole bunch of miners not getting used. Who's going to have them? Is there someone who wants to snatch them all up to try to do an attack on some coin that's mined with SHA-256? Because it's not just Bitcoin. Bitcoin, Bitcoin Cash, Bitcoin SV, these are all mined with SHA-256. So the same pool of power is usable for all of them. Now, BTG doesn't fall into that at all because BTG uses a completely different algorithm, which is only mineable on a GPU. And we try to make it so anyone can mine, but there are limitations. You have to make it demanding enough on the GPU, require enough memory from the GPU so that you can't build an ASIC for it. If we made it an easy algo, it's easy to build an ASIC. So we have a specific algorithm which requires a lot of memory so that you can't build an ASIC for it. And if necessary, we'll fork again in the future to change the algo to preserve that ASIC resistant nature as long as we can.
Isn't that something which Monero did, like fork a couple times to get rid of the ASICs?
But Monero has a regular routine of us every 6 months doing a fork, which changes the mining algo. So they're in a cat and mouse race with the miners, the miner manufacturers. So they're making little changes. The manufacturers make little changes. Moneros make changes. But the type of algorithms they do, they use a rotation of algorithms. Each of those algorithms individually is very amenable to a MASIC. And so that's why they have to keep changing the cycle to find ways to thwart the ASIC. BTG took a different approach. We use a variant of Equihash, which was first developed for Zcash. Equihash lets you change the parameters, and depending on the parameters you set, it requires different amounts of memory, and it really uses that memory hard. So if you set it to use a lot of memory, then you can't make an ASIC because an ASIC tends to be a single chip. You can't squish all that memory onto a single chip.
So that's one of the problems I have with ASICs. You know, it's like Bitcoin is great. You know, it's the first Bitcoin which made the whole cryptocurrency space. But if you look at the hardware and the whole business behind it, they produce these machines who can do one thing and one thing only. They I don't know how much energy and how much waste everything goes into producing those things. But after a year or two, basically those things are useless. These are useless machines. Maybe some other coins can repurpose them where the electricity is cheap, but it's not something which I think is good for the planet in the long run. This is something which there's no other purpose for this machine, and that's something I don't like about it. You know,
you're absolutely right.
Bitcoin Gold, it's a GPU. If you don't want to mine, we can talk about mining a little bit more, but you can play computer games with it, you know? It's so
it's much more than that. GPUs today, sure, you use them to run computer games, but they're also used to render graphics. You know, what movie have you seen that isn't mostly CGI anymore? They're also used in scientific computation, flow modeling. You look at any of these great pictures we see of like, this is what a black hole looks like. That was all rendered on GPUs, but also calculated. The modeling was calculated on GPUs. Neural networks drive a Tesla. It's driving itself almost. It's almost ready to drive itself. The model that it uses is mostly done on a GPU. AI, neural networks, this is all done on GPUs. Computational power like that is used for many different things. So when you decide to stop mining and sell your graphics cards, you can sell your graphics cards. And if you want to start mining, you could buy them used, you could buy them new, and there's always huge price competition. So the manufacturers are always having honest competitive prices because they're competing with each other, not for mining, they're competing with each other for the whole market.
Yeah, and I mean, this is what I like about GPU mining. I personally, I don't mind because I mean, electricity in Germany, I pay like 30 euro cents a kilowatt hour. It's crazy, right? Yeah, so it's not worth it. Big. But I mean, every year the electricity prices go up crazy. But different story.
Different story.
With Bitcoin Gold is how big is the mining? I mean. Comparable to other coins. I mean, what other coins are like Ethereum is mined on a GPU, right? Still.
Okay, yes for now. It's hard to make a side-by-side comparison because the hash rates are not comparable. So for example, even with two Equihash coins, we used to be Zhash, we used to be Equihash 204, now 200,9, and now we're Equihash 144.5. Which is now called Zhash. So two changes in variables. When that happened, our hash rate dropped by 15-fold. So we suddenly had 1/15 as much hash rate with the exact same number of miners, because each graphics card produces 1/15 as many hashes. So you can't compare the two. That caused confusion. If you look at our historical hash rate chart on the day of that fork, which was July of 2018, you'll see the hash rate drop to 1/15. We lost no miners. I was surprised we lost no miners. I thought we'd have some fluctuation. It turns out we lost no miners. It's just that those same miners produce so many fewer solutions per second that it averages out. So how do I compare our hash rate to, ethash, Dagger Hashimoto? How do I compare it to that? They're completely dissimilar. And some graphics cards are better at one thing than another. So if you have a Radeon card, it's going to be better at doing Ethereum mining than doing Equihash mining. But if you have an NVIDIA card, it's going to do better at this and less at that. So I have a graphics card. Which does it do more? It depends on exactly which graphics card. And of course, it depends on how much memory you have. If it doesn't have enough memory, it can't mine our coin. And we're now hearing on Ethereum where we're hitting that 4 gig limit. If you have a graphics card with less than 4 gigs, you're not going to be able to mine Ethereum on it anymore much longer.
Right. Yeah, it's very interesting. I mean, if you look at the white paper, right? Not, it wasn't the white paper. I think it was somewhere on the Bitcoin Talk forum. I think was it Satoshi who wrote that he sees the future that where the mining will be specialized in data warehouses. So he foresaw that future to happen, if I remember correctly. Right?
Very close. Maybe, maybe not. I believe his phrase was something along the lines of, eventually mining will mostly be done by specialists, but for now it's nice that anyone can mine.
Yeah.
Exactly. And we don't know what he meant by specialists. Did he mean people like me who have 6 mining rigs in their basement? Or did he mean people who are running warehouses? It's not entirely clear what he meant by that. But what I can say with certainty is that the reason Bitcoin took off over time was not because people were thinking, hey, someday this will be mined in warehouses. No, it was because they latched onto the concept and said, this is decentralized. This is not controlled by any entity or government. And we're involved in the securing infrastructure. We're involved running the network that supports all of this. That's why the idea took off. That's why people committed lifetimes to working on Bitcoin. So whether or not Satoshi thought this is where we'd end up or not, what he created took a path that people loved because of what it is.
Yeah, I mean that's very, very interesting, because if you the idea that anyone can mine is great. I mean, it makes really a decentralized currency, and for a network which let's say for if it becomes cash and people use it, and we have thousands or 100,000 of miners all around the world, is a very secure network, really. But can a network like this, which isn't really run by big companies, big business, and like Bitcoin is, become like a huge global used ledger, like we all envision it to be someday? Do you think that can be achieved through home, or do we need it like Bitcoin is doing, like ASICs and big companies, big warehouses?
I think it can be achieved by individual users all over, combined with companies and corporations. We can all be on the same side if that side appeals to everybody, which is part of why we're taking this non-ASIC stance. It's not that we hate that kind of hardware. It's that we've seen what it does in terms of centralizing to the mining market in Bitcoin, and we want to offer a coin with an alternative to that. Now, what you're really getting at when you're saying, can we have this huge network that's really safe? Because that's the question. How many miners is enough to make the network safe, to make the blockchain safe? And there's a couple of responses to that. First is the size of the mining network in today's market is largely a function of the price.
Yeah.
Every time price doubles, the size of our mining network doubles, because there's a revenue level. And if our price were triple what it is now, right now, you could mine profitably, very profitably, despite the high cost of power in Germany, because your earnings would be 3 times as high. Now, of course, when more people come in, the difficulty adjustment algo brings up the difficulty, that balances out. But yeah, but the point is, when there's higher price, we get more miners, lower price, less miners. If people start committing more to Bitcoin Gold, to BTG, and they mine BTG and they invest and hold BTG, the price goes up, the revenue from mining goes up, and also those coins that you mined earlier, if you held on to them, the value of them goes up. So there's this ratcheting effect where the hash rate goes up with the price over time. So that makes it more and more secure. The other side of things is there are approaches that add more security to the blockchain without having to require more miners. And these are really important to explore. And that's something that BTG is really proud of right now. We're working on building out the code to do something called CCBN, cross-chain block notarization. If you go to the Bitcoin Gold website, which is bitcoingold.org, you can find links in the technology section to CCBN and a description. It's basically a method of using notarization, and that's a well-known thing. Lots of projects have tried various forms of notarization, but we've come up with a way to use notarization in a completely decentralized way. So there's no notary who's the authority who's in charge. Rather, we notarize to another existing blockchain. So anyone can look at the notary chain to see when the blocks appeared and in what order, and anyone can mine on the actual BTG blockchain, and anyone can notarize those blocks to the other chain. But once you know what blocks came out in what order, you have a timestamp. Even if the same block ID comes out with the same block height, you know which one was first. And when you know which ones were first, you can do a lot to thwart the people who are trying to do things like 51% attacks. So CCBN gives us enormous protection against 51% attacks. We've developed a scheme that makes it so that if you are, say, an exchange and a deposit comes in and you wait, say, 4 confirmations or so, it's very unlikely that could be reversed. If you wait for 6 or 10 confirmations, there's effectively no chance that could be reversed if we can get CCBN implemented and the exchanges and the mining pools will buy into it. It requires the mining pools to participate, but we have every reason to think they will, because CCBN will protect their mining revenues. People forget sometimes when there is a big 51% attack and somebody does a double spend against an exchange, they only think, oh, the exchange lost all the money. The miners lost money too. The miners that mined 10 honest blocks or 15 honest blocks and had those reversed by somebody who cheated, they lose all those revenues. They lose those mining rewards. They spent all that power for nothing. So we expect the mining pools and the miners to support CCBN. And once they do, there's no reason for the exchanges not to use it to protect themselves. And then we have a level of protection that's unparalleled given the size of our hash rate. And of course, if that causes the price to rise, that causes the hash rate to rise, which puts us in that, wonderful spiral upwards.
Is there something, I think I read that Bitcoin Gold had a few 51% attacks. Is that true?
Yeah, it has happened. There's no denying that. It's all on the blockchain and in news history. There were, in May of 2018, there were a series of attacks over the course of 3.5 days. During those 3.5 days, multiple exchanges were hit, some of them for very large amounts of money. The biggest one was for 12,000 BTG or so. And at that time, the price was about $50. So that was a significant amount of money. Now, the media exaggerated the total size of the attacks, because you have to remember, when somebody does one of these attacks on the exchange, they deposit BTG, and then they trade it for Bitcoin and withdraw Bitcoin. And then they release the attack, which cancels their deposit. So they put BTG in, they get BTG out. That's not a gain. That's zero sum. In and out is the same. It's like a canceled check. But the amount they got in Bitcoin, that's the amount that really came. That's the value that the exchange lost. And we don't know how much that was. Multiple exchanges were hit, but not all of them said that they lost any money. Because if they didn't allow the attackers to withdraw, they still have those Bitcoin. They could buy back the BTG and level things out. Also, the media initially, the attacker did these attacks all from the same wallet over and over. So the media looked at that wallet and said, what's the total amount that that wallet ever received and spent? That must all be attacks. And they came up with some ridiculous figure like 17 or $18 million worth. And that's nonsense. They are not all attacks. They're regular wallet transfers in and out. In fact, the first deposit of coin into it, 12,000 coins into it, that was not an attack, but they counted it as attack funds. And all the attacks that failed, they wouldn't work. We've done some analysis on the actual transactions, looking at what transactions were double spent. And the maximum amount that it could possibly have been was something like $7.5 million. Can't possibly be $18. So it's at most $7.5 million, and probably substantially less, because some exchanges were smart enough to say, oh, they're attacking over and over from the same wallet address. If I get a deposit from this wallet address, I'm not going to honor it. That's all you had to do to be safe. So, as that week went on for three and a half days, as those 3.5 days went on, and we did our best to inform all the exchanges. We made public announcements, we tweeted it, we put details on the forum. We said, this is the wallet address that's doing it. When the attack began, that last attack, we told all the exchanges, there's an attack happening now. It came from this wallet. If this is your deposit address, do something about it. And you know, beyond that, we can't do anything. We don't control the exchanges.
But I mean, 51% attacks are still, I mean, they're still possible. And if you look at, I think it's Dash, right? They say that they basically, with chain locks, eliminated the possibility of 51. Oh, there you are again. Ah. Okay. Did you hear my question? No.
You started. I heard as much as chain locks, and then I lost everything after that.
Yeah, with Dash. When I look at Dash, I mean, they claim that we're the only 51% attack-proof chain with the chain locks, and it's with the concept you just described earlier. Is that similar to say that it's in the same ballpark of not being able to 51% attack the chain then?
I think once we have CCBN up and running, yes, we'll be as resistant to 51% attack as any other chain can be, given various approaches they take. I mean, chain locks, or you know, if you set a block level, you know, after this, we will all refuse any changes. So yeah, that's also been done in Bitcoin Cash. I think, for example, after 10 blocks, they won't allow a reversion. That will stop chain reversions, but they also,
which was very controversial as well.
Exactly, because it brings other risks. Besides being a change that requires a hard fork, it brings the risk of accidental chain split. And as soon as you say 10 blocks is the target, well, then an attacker who wants to just be malicious with your chain can mine 10 blocks and release them at the same time, and do that over and over until they cause a chain fork in the natural chain. And then you have races going on. You know, it opens the door to potential attack vectors, which people might find an even better way to exploit in the future. So arbitrary setting this and no more, it's very risky. And that's why it's so contentious among the developers. The developers, especially in Bitcoin, have always been focusing on the highest possible safety, because they're always assuming that the adversary is bigger and better funded than anyone working on Bitcoin. We don't know if it's going to be a government or a mega corporation, but someday the adversary will be bigger than whatever we're looking at now. So they're always trying to make it as safe as possible. And those arbitrary sorts of, you know, this 10 blocks and then it's no good, that sets up a vector that they could potentially attack.
Sure. Okay. I mean, if you look at the whole cryptocurrency space, I mean, we're still early, and I mean, I personally, I'm a big fan of Bitcoin Cash, just for the reason, because I like their vision. I like that they want this coin to be used in commerce. They want merchants to accept it. They want it to be moving. And if I look at Bitcoin, you know, Bitcoin was got me excited first, but for me, coins like Dash or Bitcoin Cash are more exciting, because these are coins. The people who push this, they want it to be used in our everyday daily life to decrease the dependence on the old system. And that's something I signed up for. You know, I didn't invest into crypto to be in crypto and get rich. Sure, I want to make money, I want to get rich, no doubt about that. But I don't want to get back into the old system. I want to basically, in the perfect world, I want to use this and want to use the coins daily. How is Bitcoin Gold in this area? I mean, Bitcoin Gold, the main selling point really is the mining, make the mining decentralized again. Is your vision as well to be used as a coin in commerce, like for daily transactions? Do you have merchants? Well, what's the idea there?
Oh, sure. There are lots of merchants available. There's a site called Cryptwork, which you can look at, which shows all the different coins which can be used at various different merchants. So there's sort of a cross coins across the space. But yes, we do aspire to see BTG used more in everyday commerce. It abides by the same basic rules for transactions that Bitcoin Cash does. So we have the same usability in that sense. Bitcoin Cash did, you know, make their block size larger and larger and larger. And of course, that was contentious with the developers from the original Bitcoin, because those developers are always looking at those attack vectors, and they recognize that that block size increase can create new attacks to exploit, and also penalizes some miners and block operators, node operators like you and me. You know, our PCs can handle Bitcoin very easily, even when the blocks are full. But if you take, you know, 8 times, 64 times, 128 times bigger blocks, suddenly your PC and mine can't validate them. Only the big companies can do the validation. To me, that's just as bad as concentrating all the miners. You can't run a node of your own anymore. So that's the argument. But I'm not saying Bitcoin Cash is wrong on this. I'm just saying that's why there was that argument. But there are other ways to potentially increase the amount of transactions without having to go to such extremes. You could just double the block size until you see more of it being used up. You can do things like implement SegWit.
I personally think that should have happened on BTC, right?
I agree. I agree. But there was also the SegWit thing. SegWit quadruples the amount of stuff that you could go into a single block. But people don't look at that as an increase. Bitcoin is still 1 meg, but with the SegWit stuff, it's about 4 meg. So, I mean, that is different. That is a block size increase. You can do other things like that. Where Bitcoin Gold, where BTG is a little different, is that because we're a smaller organization, we don't have so many huge vested interests. We can still do a hard fork without a ton of contention. So we can still make changes. If BTG utilization goes up enough that the blocks are getting full, we can consider doing something like doubling the block size, and it's not going to be a huge fight because we're all going to agree, because we're still relatively small. We can evolve. We can also do things like change the frequency of blocks. Instead of having them every 10 minutes, we could have them every 96 seconds if we want. So if people agree to that fork, which would be a hard fork, then suddenly we'll have 6.25 times more coins transferable, as many transactions per second than before. That's effectively 6 times the block size and a faster block time. That's the potential that we could do. Now, in a coin like Bitcoin, there would be an enormous amount of argument, well, this versus that. And we'd have to have those debates. We'd have to think about the security. We'd have to think about the impacts, validate the code and all of that. But we're free to make those changes without having these roadblock arguments that put the community against itself. I'm not saying we'll do any of this, but it's possible. So we have the flexibility to adopt new things, integrate new things into the chain. Plus, we retained all of SegWit. And it was contentious that at the time, Bitcoin Cash ripped out all the SegWit stuff. You can argue whichever way you want. We decided we don't need to rip it out. We can still use it. So we've got SegWit. We've got full Bech32 address support since the first BTG block was mined. And we're doing a port of LND. Our test version of LND is up and running. We're going to have Lightning Network on Bitcoin Gold. So, we can use solutions from multiple places. We can adopt ideas from multiple places and integrate them all. We've got a flexibility they don't have. We, of course, don't have the marketing power that Bitcoin Cash did. They spent a lot of money on marketing. They bought their way into a lot of places. And I'm not criticizing that. That's a valid marketing technique. Pay someone to use your coin has more use. It works. We didn't have enough funds to do that kind of thing, so we stayed out of that. We wanted to grow more organically. But that's also why Bitcoin Cash is now doing this contentious thing where they're proposing a hard fork where a percentage of all the mined revenue is going to be pulled away and put into a development fund.
I don't think it's going to happen. It looks like
I don't think so either. But why are they proposing that? Because they spent so much money on this advertising that they are running out. Obviously, I mean, if they weren't running out, they wouldn't be doing this now.
So I mean, there's so many valid arguments for both sides. We're different people. People are different. We got I don't know how many billion we are, maybe 8 billion, close to 8 billion people, right? So people who say there's going to be one chain to rule them all, I personally don't see that happen, because we have about 200 countries with 200. I mean, the world is decentralized, really. Right?
Absolutely.
Different currencies, different countries, different religions, different laws, everything.
And that's part of why we are pushing our model. There are parts of the world where you can't order something from overseas, where you can't get $1,000 to buy an ASIC miner, which will never be useful for anything else, but you can buy a graphics card. Exactly. Some places in the world, South America, Africa, they have relatively low cost of power and they have access to GPUs. Why can't they get involved in crypto and become a miner? Well, with BTG, they can.
Just set up a few graphic cards, and depending on how much money they make with it, I mean, they can live of it, really, and teach other people. And that's something I like about the mineable for everyone approach, which if you look at Craig Wright, Craig claims to be Satoshi. He says we're going to swallow all the other chains, blah blah blah. They raise the block size, and I mean, great. I mean, I love what they are doing, because the more different experiments we have, the better for everyone, because we can, if it fails, we learn. If it succeeds, we still win from it. But there's one thing he says is like that cryptocurrencies, Bitcoin is not outside of the law. And he says we will see court orders basically given to miners to reverse transactions, to freeze coins and do stuff. And I personally could see a potential that this can happen, because if there's a government pressuring a big miner, because they can't hide, that's a huge, huge, you just have to look at the energy they use and you can locate them even if they don't want to be identified, you know. So they could pressure someone to do things to the blockchain, maybe to do things which are not supposed to be done, like reverse coins, freeze coins. And that's something I don't know if I agree with it or not, but with a decentralized mining where everyone can do that, there is no way in hell this can happen, because if there are millions or 100,000 of people all mining from home, if the transaction is accepted, is valid, it cannot be reversed. And that's, I personally see that as an advantage on the one hand, disadvantage on the other hand. And that's very interesting to see that develop in the next couple of years, how law and states can regulate it. Because I think if states really wanted to shut down Bitcoin, they could cripple it in shutting down all those big, huge data centers. Bitcoin mining would still go on. I mean, because the hashing power would go down, the algorithm had to adjust the difficulty. I mean, I still think that Bitcoin would survive, but it would take a huge blow. And with something decentralized mining like Bitcoin Gold, or like even Dash or other coins which can be mined on GPU, that's a huge advantage to have a really free currency outside of government control.
Yeah, I agree. The more mining is concentrated to a few big players, even if it's not one country, even if it's spread over 2 or 3 countries, it's easier for 3 governments to collude to all decide to do the same forced changes on those miners than it is for 200 governments. You can't get 200 governments to agree on anything. I do think that if governments did try to take control of the Bitcoin blockchain and roll things back and change things, I think that the ecosystem would absolutely respond to that, and they would make the necessary hard fork changes to create an independent network. And then the onus would fall to things like exchanges. Which coin are they going to support as BTC? And then again, you have to have all the governments collude to treat their exchanges the same way, to force them to use the same version of BTC. That's really hard to do, but the more you consolidate that mining, the easier it is to do. So we want to have decentralized mining. We also have to want to have multiple exchanges, decentralized, adhering to different countries' laws, and some preferably being, above the level of countries, not above the level of law, but above the level of countries. So they're allowing something that's open and free on the internet, completely decentralized. That's how you survive government intrusion in any one specific place, by being in many places, or being in all places, or being in none.
And that's also an important point when it comes to earning crypto. I mean, today people, if they want to buy crypto, in most cases they have to go through KYC and all this crazy shit, really. And with mining from home or earning cryptocurrency, whatever you do, you can circumvent that. You just can run a computer, earn some coins, and live your life. I don't really think that any of those new laws with KYC, mandatory things, and AML, whatnot, I don't know, is going to help or prevent terrorists or whoever they want to prevent from using that. Bad people, criminals, they use phones, they live in houses, they drive a cab, they fly, they use everyday services, and it's not going to be different. But the Chainalysis study they just published, it said it's like 1% of transactions in Bitcoin were illicit. Yeah. So it's a really minuscule amount of people who do bad things, and I don't think that's going to change, really.
The key thing that I want to stress to everybody is the tiny percentage of illicit activity on Bitcoin or on crypto at all is small compared to how much is done with cash. Yeah. The amount that's done illicitly with cash is still dramatically higher. So if you want to use that as an argument against Bitcoin or against crypto, guess what? You're saying you shouldn't have any cash either. So think twice about what you're arguing.
Exactly. So how do you like conspiracy theories?
I'm not a fan of conspiracy theories.
You're not a fan.
No, I tend to be of the opinion that most of the time What some people ascribe to malice can more easily be explained by stupidity. Incompetence reigns in the world. I've had a long career working for some big companies, places like Pfizer and GE, and as an organization they can achieve great things, but at every level within the organization you can see plenty of incompetence as well. I just don't see the need for conspiracy theories to explain some of these things. And also, these conspiracy theories require dozens and dozens and hundreds of people to all be in on a secret and keep it secret. I go back to Watergate. You've probably heard of Watergate in Germany, but that goes back way in the US to Nixon and how Nixon fell from power. Watergate required 4 people to stay quiet. They failed.
I see. But the reason I'm asking is because of the hysteria about coronavirus.
Okay.
Now you see reports coming out. Cash is dirty. It can give you corona. It sticks to the paper. And for some conspiracy theorists, they say, this is the elite pushing this virus, making huge pandemic worldwide to restrict the use of cash, to give them a reason to say, okay, let's push this digital state currency further. Let's get rid of these cash quicker because it transmits the virus.
It would be a stupid way to go about it, quite honestly. Governments have already done what you just described without needing a virus. Look at India. India suddenly took all these big bills out of their monetary system, and there were poor people who, not poverty people, just unfortunate people who got stuck with money that they couldn't exchange. They had limits. You could not go to the bank and exchange more than a certain amount per day. So people who had been saving up cash for a wedding suddenly had to ask all their relatives, everybody exchange this today because this will be useless by the time our wedding comes. It was horrific. And India didn't use the excuse of any sort of virus. They used the excuse of, we know that a lot of illicit activity is done with cash, so we're going to get rid of a lot of these big bills. If governments want to do that, they don't need to conspire to release a virus pandemic on the world, which will cause millions of people to get infected and thousands of people to die. They don't need to resort to that.
And the economy going down the drain, right?
That's trouble. That's
I mean,
trouble.
that's. I mean, it definitely is trouble, and we will see how crypto comes out at the end. And I mean, at the moment, it doesn't look good for crypto. I mean, we had a heavy red day today, but I guess if you look at it, really, I mean, we are in a digital age. I mean, people, are they really going to have gold at home if they have to leave their homes, if they are quarantined? I mean, crypto is it's just a logical answer, if you ask me, right?
Yeah. Sorry, I was just looking at CoinLib. Yeah, a lot of things are red today, but looking at the returns for the week, I'm happy to say that Bitcoin Gold is still up for the week. So it's all about the long term.
Yeah, I mean, when you look at the Bitcoin Gold mining, I do have a computer. I mine a different coin with different technology using proof of capacity. Have you ever heard of that?
Ah, yes. Yep.
Yeah, burst
storage,
coin.
proof of capacity.
Exactly. And I have a graphics card in my computer, and I was looking at Bitcoin Gold. I mean, the mining doesn't really look very hard to do. You just have to download something and run it, right?
Yeah, we don't actually produce any of the mining software ourselves. We produced a reference miner just based on Equihash, which is just a copy of somebody else's altered for BTG. Excuse me. But several other people are producing miners. Our website has a list of some miners. On our forums, you can see them, forum.bitcoingold.org. We have a discourse forum, but we have a Discord where people can also talk in a Telegram.
It would be great if you could send me all those links. I can put them in the description of the video for people.
Absolutely will. Yeah, but there are lots of graphics cards that you can use and multiple different pieces of mining software created by independent developers. And some are better for NVIDIA cards. Others are better for Radeon cards, ATI cards. So you need to possibly shop around to get the best efficiency for what you have. But yeah, it's all out there, and we have lots of community members who support each other in the mining efforts. Also, you can go to sites like What to Mine. What to Mine will show you what kind of mining to expect given different cards. So like if you could look up your specific card, if you're lucky, it's already listed on What to Mine, and it'll auto-populate how many hash you get, how much power it uses, and you tell it what your power rate is, and you'll see how much it will cost you to mine or how much you'll earn if you mine. There are people who mine even though they don't theoretically make money on a day-to-day basis. They pay in power to earn coin because they want to earn the coin and have it in a fully decentralized, independent, untraceable account. Until you use those coin, it's just in a wallet address. It's not connected to you. It's not your name on it. There's no KYC. You just download, create a wallet, and start mining. Now, someday the laws may be different. Someday the laws may not penalize you for trying to use a little bit of Bitcoin or Bitcoin Gold on a transaction. I don't know the specific laws in Germany, but here there are some stupid laws. Like, if I bought Bitcoin for $1 10 years ago, and I want to spend a piece of Bitcoin to buy a cup of coffee today, if I, fancy coffee, $6, I have to account for the appreciation from then to now, and that amount I have to declare to pay as capital gains tax on my earnings to pay for the cup of coffee. That's just ridiculous.
It's ridiculous.
But that doesn't happen with normal currencies. If I go to Japan and I have some Japanese yen, and then several years later I find those in my wallet and say, oh, I could convert these. And I don't have to pay a tax on the appreciation, or take a loss on the gain.
That's the way it should be, right? I mean, France just passed the law about Bitcoin, that Bitcoin is currency. And South Korea has some new legislation.
Japan's been way ahead of the curve. Yeah.
Japan, India now lifted their ban. I mean, it seems like everything is moving in the right direction. And I guess India is a great market as well for Bitcoin or GPU mineable coins.
Yes, we had a pretty good following in India. It was a popular year because also the name in India, it's long been culturally popular to collect gold. Gold is a way you pass an endowment to your children, to your spouse, etc. So it caught on partly in that sense. But our India community really came down with those really draconian laws that they put in. So that really harmed things in India for a while. So that set them back. They're behind the rest of the world on crypto, but they finally got smart and loosened that up and stopped making it illegal. So we hope to see a resurgence in India. That's just another reason that BTG's got a lot of viability, a lot of growth potential in the near future.
So let's look at the future with BTG. What do you envision for BTG in the next, let's say, 3 to 5 years? What's the plan? What do you hope that will happen?
3 to 5 years is a long time. What I'm looking at, I know we're going to continue upgrading and developing the core software. I know we're going to put out more tools that allow people to look at a broader information about our network, about our Lightning Network.
Anything about privacy?
Maybe, maybe not. That's something we're being very careful with, because we still want to be listed by more exchanges. And there was a brief time when some privacy coins started getting onto some of the big regulated exchanges, but that has stopped. You don't see that happening anymore. And that's because the regulators have gotten much more involved in what's happening with the big exchanges. And as long as we keep that, that hidden money aspect out of BTG, it's easier to get into exchanges. We may preserve it that way forever and allow side chains to happen that people want to use for that sort of thing, allow people to do potentially exchange on Lightning Network, Plasma side chains, that sort of thing. If they implement privacy like that with BTG as the base network, that's not our fault, that's not our achievement, but it's something we can't stop because we're open source and decentralized, so people can do that. If that happens, we can have the base coin, BTG, on these big exchanges that are government regulated, but that are also responsible and reputable and have huge volumes, while still having these side chains where people can do that kind of thing if that's what they're looking for to achieve freedom on their own. So I personally, I'm only one vote of 6 on the board and I'm not the community, but personally, I think that's sort of the balance we should go for. But I'm not going to promise anything. 3 to 5 years from now, the rules and regulations that governments work by could be very different, and that could change what we believe we should be doing as a coin. We have a lot of options, so we have the flexibility.
Do you think government will I mean, if you look at the US, it's not a good country really to use, to be in when it comes to cryptocurrency. I mean,
are you telling me to move?
Maybe, I'm not sure. I mean, I like the US. I like coming to the US, visiting, but I personally wouldn't want to live in the US because of, I mean, the whole health system and some other reasons. And I mean, there's in Germany, things aren't perfect, we're far from it, right? But I mean, the perfect country, I don't know if we have it, we maybe have to invent it, and that even wouldn't work. But the US doesn't look too favorably when it comes to the whole regulation and with the uncertainties and with the capital gains and making it complicated, and the IRS soon Coinbase, and I mean, there are lots of things happening which are not good for the community. Do you think that the US is going to come around, maybe see this as a chance, or do you see Trump or any other president, if he doesn't get re-elected, cracking down, saying this is a threat, we have to preserve the dollar as the #1 currency, we're going to make it digital, we're going to outlaw this stuff, and any country who allows it, we're going to sanction, right?
Okay, so here's my answer. Yes, the US is going to come around. I don't know how long it will take, but yes, the US will come around because they realize that it's going to happen whether or not they want it to happen. I mean, you didn't even mention one of the problems with the US, which is that we're not as united as people think. We do have one federal government with a lot of powers, but we have 50 states.
Yeah.
That's one of the things that drives crypto companies crazy trying to work in the US. Even a big company that comes in and follows all the laws, gets all the registrations. Yes, we're now active in 45 American states. Well, why only 45? Well, because you can't figure out how to deal with those last 5, or they're too restrictive or whatever. You know, there's too much variability, and we need to address that. But like you said, there's no perfect country. One thing that's great about the US system is that we have 50 different experiments going on at every point in time. So one state might do better, another state might do worse, and people can choose what state to live in, what state to operate under, potentially to take advantage of these things and to reward the people that are going the direction that the people want to go.
Same with marijuana business, right? I mean, it's illegal on the federal side, but the states say, okay, we if you look at Colorado, for example, which
more and more,
and California, I guess Nevada and some other states came around as well. So I see it kind of similar, as you say.
And part of that is about the social acceptance. It became more and more acceptable among people to accept marijuana as something that's no worse than alcohol. Quite honestly, alcohol appears to be much worse for society than marijuana. So people said, that's not honest, that's not fair. There's nothing that bad about marijuana. And I agree with that. Personally, I've never actually smoked. I've never smoked, and I'm not.
But marijuana and crypto are a great match, really. I mean, if you look at the restrictions, right?
Yeah. Well, that's something I like, because the path marijuana took, it became more acceptable. There were legitimate medical uses for it, and eventually governments started allowing it, even though the federal government still calls it a classified drug that's horrible. That's old laws. They need to be changed. A lot of states are allowing it. Even states that haven't legalized it have set policy where they don't enforce the law for minor amounts. So if you're caught with a little bit of marijuana, you are not thrown in jail and have your life ruined. So that's a wonderful thing, but it's a wonderful evolution. And I believe that's going to happen with Bitcoin and cryptocurrency.
In a similar way, right?
Exactly the same way. More and more adoption, more and more people involved. People talk about it more openly. I don't use it for criminal activities. I use it because I'm involved in this thing, which is global. And the global is the thing. They realize that with marijuana, even if they want to, they can't stop it because it's not really bad. People still do it. People will import it from somewhere. People will sell it to each other. Same is true of crypto. The US may say, hey, we want to keep the US as the US dollar as the standard in the world. Well, guess what? The rest of the world has a say in that. And they're going to move on to crypto. So you know what? If you don't want to be left behind, catch up with the rest of the world.
They can't stop it, you know. That's interesting. That's the first time something came along which can't really be stopped. I mean, the US has been the world police, and they can dictate really what's happening with few countries. Or you can't send money to Iran or wherever, you know. And this time it's different, right? So I hope it's going to be a people's revolution where enough people catch on and really use it. And that's why I'm a big advocate of using coins, because if you have BTC in your wallet and it sits there, and you're hoping that the price goes up so you can sell it for profit in the future. I mean, what's really good about it? Maybe it's a nice investment, but it doesn't change things. Right?
Well, it's still a great store of value, but also, you know, there's the strong argument for saying, you know, we need some coins that can be sort of the base infrastructure, large transactions, large holdings, and other coins that can be the really rapid stuff, the smaller transactions and the things that happen day to day. You know, it doesn't have to be one coin for all purposes. You can have multiple coins that do good things. Now, that's not to say we should have 3,000 coins, and we probably have over 3,000 at this point. You know, most of those aren't going to survive. They're all experiments. They live for 6 months, they live for 12 months, and they go away. Other experiments like BTG survive for years and continue to see a resurgence and a regrowth. that's part of the whole process of allowing people to try different things to see what works. I think we're seeing more innovation and more growth in the crypto space than in traditional industries, partly because we could do things like work together with global teams, work together with great ideas that people have in countries that have foreign cultures to your own, that can bring in ideas, bring in freshness that you're not restricted to. I think that's what makes it so powerful. I agree with you that we're going to go that direction. I just don't agree with you about the revolution. I don't want to see it as a revolution. I want to see it as an evolution. I would personally rather see it as small steps that go in that direction to get to the same place you want. I just don't want to see it as a sort of catastrophic revolution. I don't want to see I don't want to tear down the banking system.
No.
I want to convert the banking system so that
Just make it
gradually moves in
obsolete,
our
right?
direction. Yes, we can obsolete it slowly over time. We don't have to disrupt everything. We don't have to make pensioners lose their invested funds, their pensions, because we tear down the banks. We can let them all convert to the crypto world gradually, so that years from now we can look back and say, "Oh, do you remember when we had banks? Why the hell did they do that?" Well, let me explain to you, little boy.
Yeah. I guess in sometime in the future they're gonna look back and they're gonna ask you, when your granddad say, the kids come up to you, say, "Dad, granddad, why did the state control the money? Why?"
Mhm. Yeah, well, I've already experienced that. I'm a little old for the crypto space. I'm almost 50, and I've been involved with
You look very young though.
well, thank you. Working in crypto keeps you young. But I'm such an old hand with a lot of the technology that they've already come to me with questions like, what does it mean to dial a phone? Why do we say dial? Because we used to circle the dial. Why do these old houses have these stick things on top? That's a TV antenna. A TV antenna? What does that mean? I've seen lots of these things where old technology is so gone that people today don't remember. There's things about crypto that I have to remind people about. I talk to older people at traditional financial institutions sometimes, older people, because I worked as a director of IT for an investment bank for years as well. And I'm talking to some of them and they say, how can this crypto thing ever take off? And I have to remind them that, back in the 80s, people were saying, I don't know about credit cards. That could be dangerous. I may not use them. And then in the 90s, they were looking at the internet saying, that's not going to take off. And then around 2000, they were saying, yeah, internet's nice, but nobody's going to buy stuff on the internet because nobody will use credit cards on the internet. So they had already accepted credit cards, but no way would people use them on the internet. Look today, everybody uses credit cards on the internet for more shopping than
They get hacked all the time.
This is evolution. People forget that things evolve. When it happens slowly, it just happens. And it's going to happen with crypto. It's going to evolve slowly, but it's going to get there. And people will not even realize when it has happened, but we'll be there. We'll get there.
Sure. I mean, it's the logical evolution, and I do hope that it's not going to be a bloody revolution where we have to overthrow or do anything bad. If we just make things obsolete because we have better solutions, we have a better user experience, it's just superior to the old world we have, then we're going to win in the long run. And really, if you think about it, if you want to send money to China, Australia, or wherever, I mean, why would you use the legacy banking system? You press a button and it's there. Bang.
Yes, exactly.
That's the way it should be, and that's the way it will be. And I hope that we get there. And let's see how Bitcoin Gold goes. I mean, I really enjoyed this conversation. It was very interesting. And I'm looking forward to the links you can provide me, right?
Great. I will make sure to get them to
the mining and all the stuff. So people who watch this video can, dive into Bitcoin Gold, maybe start mining. I'm definitely going to try the mining thing. I mean, my computer is running every day, so why not try and see what comes out? I have to set it up next week, but I personally think it's an interesting project, and I'm gonna keep an eye on Bitcoin Gold, and let's see what the next year brings. It was a pleasure talking to you.
It was my pleasure. It was my pleasure to thank you, and thank you, audience. It's been a lot of fun, Dennis, and I love that we were able to cover so many different areas. I hate talking just BTG. I'm obviously a big fan, but I love talking about the wider environment, the government, the financial sector. But we even talked about the virus. I love a good open discussion like this. So thank you.
Yes, thank you very much, and I hope we talk soon, sometime maybe at the end of the year. See how things progressed with Bitcoin Gold, the whole market.
I'd be happy to come back.
It will be awesome. So you have a great Sunday. Thanks for being here, and
thanks everyone.
Bye-bye.